morning, everybody. Welcome back to the Everyday Growth Advisors webinar series. I hope you guys are having a great morning. Excuse me sniffling and having a terrible voice today. I am officially not feeling that great. I think I've pretty much overworked myself this week with the move and everything which relates to, just pushing the envelope. But you know what? It's all worth it because I get to see you guys every single day. I hope you guys are having a healthy day across the world. Thank you for tuning into my live stream, taking your time out to be here. Today we're going to be going through a topic on how to play earnings reports, the run-ups towards earnings reports, what kind of options you should be playing, just in general from my experience, how you can actually get ahead of most earnings reports and kind of take advantage of the various different strategies that you can use. So I'll be going through a checklist, what are the things that I usually look for, but I want to put a very, very strong caveat on things before we even jump into it, okay? The important thing about earnings reports are no matter how you play them, no matter how you play earnings reports, they're always going to be a 50-50 flip, all right? A 50-50 flip. Why? Because you may always ask the question, hey, T, so this company reported earnings, and they reported great earnings, but then why is the stock down? Well, the answer to that is because there are many different things that go into earnings reports, right? It's not just about EPS and revenues. When companies report earnings, there are a lot of different pieces of information that get priced in. Sometimes the general idea would be that even if the company beats earnings in terms of EPS, which is the earnings per share, and also beats the revenues that analysts were targeting or they were targeting, or maybe they had great guidance and then they smashed their guidance, that's probably a bullish sign, right? But the moment that the company actually deviates from their guidance, or they go through a process where they're not really performing up to expectation, then what happens is the stock is usually irrationally sold off. Now, also there is a after earnings play that you can do, right? Let's say something gets sold off irrationally. Well, let's look at Fossey as an example, right? This stock had earnings recently, the earnings are coming out soon in a week from now, but they lowered the guidance, right? They lowered the guidance, and look at what happened to the stock, right? It just dropped almost 20%, right, overnight, on lower guidance. And so things like that happen all the time. Even during earnings reports, you can see stock would actually irrationally be sold off from time to time, right? And this causes a kind of a perplexing moment for investors who don't understand what's going on. So sometimes it can be really confusing. So let me try and break it down for you guys, so maybe you have a better idea on how to properly manage your risk around earnings reports. Remember, no matter what you do, at the end of the day, it's a 50-50. All right, 50-50. It's like taking a coin and flipping it, because the company could have great EPS, it could have great revenues, and then if guidance is terrible, then this is going to be a sell-off. All right. So yeah, a couple of things can go wrong. All right. So let's have a look at what the general checklist is. And I'm really sorry my voice sounds terrible. I'm really not feeling well. I'm kind of having the sniffles plus a little bit of a sore throat. Definitely not COVID though, because I don't know for sure, but I hope it's not. And I'm definitely going to the doctor tomorrow, so I'm gonna get it checked out. So yeah, I'll probably if I really can't make the live stream tomorrow, I'm gonna post I'll post a excerpt on my Twitter on EGA Learn and give you guys a play-by-play on the Neo fundamental analysis. But you guys know me, I hate to miss live streams because I know that you guys come here and you want to learn, and I want to provide that platform. So no matter how sick I am, I'm definitely going to try and turn up and do the valuation with you guys. What I can promise is that I will do something for you guys. What I can't promise is how long that something will be. What I want to say realistically is maybe I might cut the live stream a little bit short tomorrow, and try to conserve my energy as much as possible. I've been drinking lots of tea today. You can kind of hear my voice is I sound like Daffy Duck at this point, right? Okay, let's go through this checklist. So what do I usually look for? A couple of things I look for. The first thing that I actually look for is the implied move of the stock. So you can do this by going to optionslam.com. I like to use this website. Let's say you want to look at Microsoft, right? And you pull up Microsoft's information here. You can see the implied move for the weekly contract, and then the implied move for the monthly contract here. Okay. And then this current 7 days implied movement is about 3%. Now, what does implied movement mean? This could be either a move up or a move down. That's what this means. It could be a move up, or it could be plus or minus this many percentage. That's what implied move means. Okay. Implied moves means that's the move that option traders are expecting of the stock. Okay. And then I also like to look at the next thing, which is the open interest and the volumes of those options. And you can also see a good variety of that information here as well. If you have Premium Option Slam, which I think I do, but I just haven't logged in yet. I need to get the login details. You can actually see a really good breakdown of what the company's movement's going to be in terms of the open interest and volume. Now, a higher open interest and volume means more people are trading the stock, right? And that's generally better in terms of, if you're looking at Microsoft, right? It means more people are getting in, getting out, right? You want volatility to be high. You don't want volatility to be low. So a low volatility stock is usually the one that you want to avoid. Also, if you're here and, you want to make my day a little better, smash the like button, guys. That's what you can really do. If you guys want me to be well, smash the like button. I feel like if we reach like 80 likes today, I'll already feel much better. I'm just totally kidding. But I really appreciate you guys taking the time to be here. Smashing the like button always makes me happy because then it allows this stream to reach other people. So yeah, definitely be doing that. Thank you very much for doing that. Now, the open interest and the volume. Open interest, what is this? This is the amount of people holding contracts, right? So the higher the open interest, that means more people are betting on that specific contract, right? The volume means that this is the number of contracts traded for that day. You want to be looking at the volume as a representation of how popular that option is being traded, okay? And then also short interest, right? How many people are shorting this stock? Because knowing how many people are shorting it makes a big difference. If the stock has a high short interest and, this value is like something like 30-40%, then you know that there are people who are betting against the stock. And what that sets the precedent up for is usually a short squeeze, right? You guys know what a short squeeze is. A short squeeze is when, there are a lot of people short in that market, and prices are actually going up, further up and further up, and what happens is that people get more and more bearish and more and more bearish and more bearish as the stock goes up. But guess what? The stock keeps going up and then pushes up big time. Why does this happen? Because all along through this point, short traders are getting completely squeezed, and what do they have to do? They start closing out their trades. And when they close out their trades, the opposite of a short, remember, when you short shares, what are you doing? You're actually borrowing and you're shorting these. So when you borrow and short, what do you have to do? You have to sell them away. Not sell them away, but because you are borrowing it from somebody else's short, you have to buy them back. So the opposite of a short is actually a buy, okay? And when a buy occurs, then what does it do? It pushes the price even higher. That's what we call a short squeeze. So knowing what the short interest is allows you to actually capitalize on that one thing, which is important market information, okay? So short interest is another important one there. Also, how the stock has been performing year over year and Q over Q, right? For the past 4 to 5 years, you definitely want to know how the stock has been performing, because if you don't, then how do you ascertain whether it's going to be a positive or a negative earnings beat? Usually companies with a great track record like Microsoft or Amazon or Apple, they could have months and months of positive earning beats, and then when you see a short downturn, you'll see that the odds don't really stack in their favor. So you definitely want to be on top of that as well. Okay, that's another great way to look at the performance. You got to look at the year-over-year performance, how many years has been consecutively doing well, and then the Q-over-Q performance, which is a quarter-over-quarter performance for the past 4 to 5 years. Okay. Let's see. Good morning, guys. Good morning. Hopefully not the big C. Nah, not the big C, man. I hope you feel better. Thank you very much, Melissa. I appreciate that. How's the new setup? It's actually dope, man. Thanks for asking, Rishab. I appreciate that. echinacea and echinacea tea and honey. All right, I will go look that up, and I'm definitely getting some tomorrow. I feel really terrible right now. I don't know. I just feel like I need to sleep for like 10 days or something. Good morning. Good morning. Echinacea for sure. Sure. I guess 2 people said that so far, so I gotta go look at what that is and get it. What's the deal? Pickle, is everything kosher? Good morning, team. Top of morning. What's up, Charles? Welcome back. So thank you, Chia. Appreciate that. Appreciate it very much. Quick at home quick at home COVID test for you. Yeah, you know, I told you I'm probably going to see a doc tomorrow. I gotta go to like the clinic and get a checkup done because I mean, I definitely don't feel like this is COVID for sure. I probably caught something from like moving and just being exhausted. I've been really exhausted, guys. I've been concentrating on the move so hard that I've forgotten to like eat and drink on time. I think that's what it is too. Dehydration and everything really weighs down on you. How much interest in volume look at? I feel like more than 1,000 in open interest volume is usually a good way to go. Volume, it's not like a very like deal breaker, but then I feel like open interest is more of the one that you want to really concentrate on. How many people are holding those contracts? Remember, another thing about playing earnings is that those contracts tend to have higher IVs. All right, earnings contracts tend to have higher IVs, and so remember never to buy IVs that are above 80%. Now this is actually really difficult during earnings season to get contracts with less than IV 80%. So you got to try and be cognizant of what kind of contracts you choose. My recommendation, stay with below 80%, but sometimes it's fairly impossible to do this. So good morning. What's up, man? Poco Molo Boko. That's a cool name. Hold on, what's up, Carmelo? What's up? Welcome in. Wasabi will clear it all up. Hell yeah, send me some. Good morning, T. Hope you feel better. Thank you, DP. Appreciate you. Good morning. Feel better. Thank you, Azuki. I always have trouble pronouncing it. I'm so sorry. Azucina. I'm gonna say Azucina. I feel like that's the right pronunciation. Sorry if I murdered it. What's a decent short interest number you're looking at? Netflix 2.46. Yeah, that's still pretty low. Short interest should be around, I want to say 30, 40. That should be a decent short interest, right? 30, 40%. That's your reminder to drink water. Absolutely agreed there, Connor. I've been slipping, man. You know, you pay a big price for slipping. You know, that's the reason why I like to stay consistent. Eat plenty sea vegetables. Yeah, I will. Absolutely. Okay, next thing. Next question you got to ask yourself is, was there any insider trading recently? Okay, and you can find this information out by looking at the company 10Q. The 10Q will usually tell you, how much people have been buying and selling shares. And by insiders, we mean people within the company, right? Let's say you're looking at Microsoft, then how much shares have Satya Nadella been buying and selling, right? How many shares has the CFO or the CEO, have they been loading up? Have they been selling? What's been going on? Usually, this is a little tricky sometimes. When people sell shares, that's not always bearish. But when people buy shares, I'm talking about insiders, when people buy shares, that's always bullish. I know that's counterintuitive, right? But here's my logic with that. If you're selling shares, it doesn't necessarily mean you're bearish, right? You could be selling shares because you wanted to buy that Ferrari that you've been always wanting to buy, right? But then if you buy shares, that's almost always going to be a bullish thing, right? Why the heck would I want to buy more shares of the companies I'm invested in? I'm already getting shares, right? I wouldn't want to buy more shares, right? So psychologically speaking, when insiders buy shares, that's usually a bullish thing. When insiders sell shares, it could be bearish, or it could be just them getting rid of some shares to make some liquidity for themselves. So that's a little tricky sometimes. So selling shares, you got to look at it. Look for news headlines of them making big ticket purchases. That usually lines up pretty well. Have hedge funds been buying stock? That's the next thing, right? Institutional ownership. That's the next one. Let's say, for example, has Ray Dalio been loading up on Microsoft, or has Ray Dalio been buying Netflix or Apple? That's what you want to definitely find out. Institutional ownership there. Mutual funds, hedge funds like BlackRock and Charles Schwab and all those big names. You want to see what they're buying. That's generally the idea there. Okay, so check out what hedge funds are buying. This information is publicly available. A couple of Google searches will be able to get you the information that you need. Okay. And then ultimately, right after you're done with all, I know I have a few more than I expected. I was actually going to do 5, but here's 2 others that are freebies for you guys. Technical analysis, right? You got to start doing technical analysis right at the end, okay? So when I'm looking at technical analysis for earnings, what am I looking at? I'm looking at whether this is bullish or bearish overall trend, okay? And then I'm also looking for key things like gaps, okay? Like, see, there was a gap here. Apple came down to close the gap. And then there's another gap here that we haven't closed. So Apple can actually come down to close this gap, right? Overall, you want to be really cognizant on what's going on with the, in terms of gap plays, okay? Sometimes during earnings, stocks gap down just to go close some arbitrary gap, and it happens. Now, I know many of you are going to be like, oh, but what are gaps? How do you trade the gap? And I've said this millions of times. Like, you don't freak out about gaps, okay? Yeah, there's a gap down here, but does it mean that Apple has to close it now? No, it doesn't, okay? The way that I like to think about gaps is like, you got to think of them like magnets, okay? Like, let's say there's a gap here, like below here. There was a gap on this side, right? Right here. There's a gap, right? So what will usually happen is this gap is going to try and like pull the stock price down. It's going to try and pull it. But the further away the gap from the stock price, which is this distance here, the further away, then it's like kind of like relativity. I cannot believe I'm using a physics reference right now. It's like the further the gap is away from the stock price, the lesser the effect on the gap. The nearer the gap, let's say the gap is here, then this gap, it has a more like profound impact on pulling the stock price down. I don't know if that makes sense, but it's like I've seen that happen way too many times. It's like if the gap is closer to the stock price, it has a much more higher chance for it to pull that stock price down to close that gap. But the moment it's like further away, like and I'm not talking about this distance. I'm talking about this distance. Okay, I'm talking about vertical distance. I'm talking about price action distance. So the gap here is at 98. The price is at 116, right? I'm talking about this distance here. So the gap is here, right? So the distance between here and here, and this is just the way I like to think about it. If the gap was here, it would be a much easier gap fill. But since the gap is here, it's a much harder gap fill, and it's less likely that it occurs. Okay, that's just the way that I think about it. All right. Cool. And yeah. Let's see here. Yeah. Potential breakouts, yeah. Oh, yes. Potential breakouts, right? Stocks at all-time highs. Let's see. I don't even know what's at all-time. Baba, right? Baba's at all-time high. Yeah, Baba's at all-time high. So let's say like Baba, right? Look at Baba. It's an all-time high here, right? Consolidating above this resistance. If this earnings is better than expected, what can happen here is Baba can just shoot through the roof. Okay. So this is a great example of what I'm trying to explain here, right? You see a perfect up channel here. Baba's trading within this up channel. If Baba breaks above and performs well for earnings, what's going to happen is this stock is going to just go like whoosh. You know what I'm saying? It's going to go like one of that. It's going to take a rocket ship all the way to Mars. Okay, so that's one thing. Like consolidation above resistances, plays to all-time highs. Stocks tend to gap up after earnings when they are already in a bullish phase. Like you can see Baba's on a crazy bull run, right? And it's actually a pretty good bull run too. It's like, it's very healthy. You know, you have your wave up and then you have your wave down. You have your wave up and you have a wave down, right? This is a very healthy uptrend. You know, you have nice little up waves and down waves. And, you know, those are exactly the types of setups that I like actually. You see wave up, wave down, wave up, wave down, wave up, wave down. Right, and these are healthy uptrends, you know. But technically speaking, here, Baba's, you know, it's in a phase where it needs to come down for a bit, right? So those are the couple of things that I look at when I'm playing earnings specifically. Okay. All right, I'm gonna answer some of your questions now, and then I'm gonna call this stream. Call it a day on this stream. I'm feeling absolutely terrible, so I feel like I just honestly need to go get some rest. Screenshot of your checklist, super informative. Thanks, man. No problem at all, Ramon. I hope that it was helpful. Thank you. Like UBM, buying 4 million shares of Tattooed Chef yesterday. Yeah, possibly. Do you use any scanners to find decent ERs to consider? I've used Finviz, the past average volume, Yep. You could use that, Connor, if you want. Specifically for me, though, I avoid playing ERs unless I'm like, more than 50% certain of something. If I have like, a good idea on how the company's going to perform, I can back it up with some strong fundamental analysis and then strong technicals as well. That's what I would usually play ER with. But no, definitely, I understand what you're saying. Like, average volume more than 1 million, and then the scanner is setting you up to look for potential plays. I get it. Feel better. Thank you, Em. Appreciate that. Thank you very much. Do we already do a pre-market analysis? So, Michael, on Tuesdays and Thursdays, we do webinars instead of pre-market analyses. So these are short webinars where we cover different concepts. Like today, we're doing how to play earnings reports. The pre-market analyses happen on Mondays, Wednesdays, and Fridays. So yeah, I try to mix it up a little bit, keep the live stream lively. Let's see here. Yes, boo, self-care first, get well soon. Thank you, Alora. I appreciate that. I really do. I'm gonna be drinking honey water the whole night today, hoping to nurse this back into health tomorrow. But I would never let you guys down, so I'm here, and I'm definitely gonna try and turn up for tomorrow's stream as well. It's been a rough couple of days, guys. I've been kind of just juggling between this whole apartment moving and I finally have my setup, but I feel like I just need like a day or two to like completely zen out, like zen, and I'll take the time that I need to myself, because that's what you got to do sometimes. So if you guys, enjoy the stream so far and, would like to see more of this stuff, make sure you smash the like button. Also, on Thursday, we are going to be doing a live stream on high success rate trading setups using volume and OBV indicator. I'll go through how to use the volume and OBV indicator on Thursday's webinar. Tomorrow, we'll be covering the fundamental analysis of NEO and the pre-market live stream. For someone who was asking me about the quick pre-market rundown, remember what I said yesterday? I was saying yesterday that we're going to have a sell-off, and indeed we did. Sold off yesterday. It's because NASDAQ was supposed to go down into that pocket that we were talking about. We actually bounced off the 50 Fibonacci retracement here, and we'll see if we can come back into this channel here. Actually, I probably need to move the channel now. It's not valid anymore, so this is probably a better idea here. There we go. That looks better. So yeah, I would say, guys, stay safe out there, be cool, don't make the same mistake as me and overwork yourself. Definitely take the rest that you need. If you can't don't force it, get the rest recovery you need. No worries, we'll be here when you're feeling better. Thank you for that, Melissa. I really appreciate you saying that. I just feel like I enjoy doing these streams. It's just, I don't want to let you guys down. And I enjoy working hard. So it is what it is. I'm a workaholic, unfortunately. So sorry. Yeah, that's all I have for you guys today. I don't want to keep this for too long. So I want to say thank you guys for attending. See you guys tomorrow for the pre-market. If I'm not around, as I said, I'll make a community post if I'm not going to do the stream. And, if I end up having to cancel on you guys, I'll post it on my Twitter, on my Instagram, something on my story to let you guys know that I'm not feeling well and that the stream is going to be, postponed. Okay. And then I promise that I'll make it up for you guys. All right. We'll cover it the next day or the day after. Whatever it is, be rest assured that I'll make it up to you guys if I don't attend. All right. But I'll be here if everything goes well. So, thank you for being persistent, staying here, and yeah, have a great day, guys. I probably won't be trading today. I'm gonna be sleeping. I'm just gonna take the rest of the night off, to be honest. I'll probably be on Discord for about an hour or two for those people who need to ask questions on the educational chat, which is my second home. I'll probably be here for maybe an hour or two and then answering questions. And then after that, I will probably head out to bed. So people who need me, you know where to find me. In the meantime, have a great day. And I'll catch you guys tomorrow. Take care, guys. And I love you all. Thank you for supporting me and supporting EGA. It means sincerely a lot to me, And yeah, hope you guys have a great day. Bye-bye.